Hey traders, welcome to Charts and Coffee. Happy Friday, everybody. Great to see you here. All right, so we have, a lot of volatility in this market right now. And I believe Ballard, who was the FOMC member, who, if you recall yesterday, hit the airwaves and markets headed lower, coming on back to maybe reset that apple cart. But if you take a look at where we sit right now on the indices, we're sitting right down near those lows. Now we've come back quite a bit. Here's the round trip that we took yesterday. I think sometimes you step back and look at those daily candles and dissect them, break them down into those 5-minute intervals. You'll see, what we've done and who, more importantly, did it. In other words, middle of the day, Asian session weakness, a little bit of stability through Europe and the UK. And then after about 7 a.m., it looks right about when the caffeine kicked in. Boom, New York, Wall Street, the US session has driven the 5-minute, the intraday back above the 200. This is the 200 propulsion, by the way, which by the way, if you've headed on over to countdowntrader.com, actually it's right there on the left side, countdowntrader.com, you can grab that propulsion. We've made our way back above it. You can see that we're printing green grab candles again. And then the end result is we've traded back up to that closing low range of Thursday. We've come back quite a bit. You'll notice that wick is very much in the vicinity of these previous wicks. So we have a range, gang. We had higher into the range. We had lower into the range. We have a range. And when you have chop and when you have a range, you don't have a dominant bias, but I'd still have to say it's generally weaker. On the NASDAQ, we have a bias. We have a downtrend. It's had a little bit of a break, right, as it's retraced. And we have a little bit of a neutral, 3 sessions of a neutral market. But this is still, by and large, fairly bearish. However, when we head down to support, you see where these wicks are. You can see where this Darvis level is. You can even cut. Do I have this here? There we go. You could even cut that last range in half and see where that 50% sits around 14,480. Keep that one in mind. All right. So that's where we sit on these broader averages. I'm still a little bearish, but I'm more bearish the NASDAQ and the Russell. I'm not looking for this market to just continue to make lower lows. I'm just looking to, you guessed it, take advantage of the bounce, right? Sell the rip, and then see if we can't retrace about halfway down through that last major move. This is the way that I deploy Fibonacci within these rangy type markets. So that's what we've got going on. And of course, as always, this show is about your questions. So let's get on to it. All right. So Jennifer, good morning. Do I trade crypto or crypto options? I don't trade crypto as much as I did probably just even 5 years ago. I am a little bit more of a hodler. I'm a little bit more diamond hands. I have never traded crypto options. I've traded the futures, the Bitcoin futures. I like to day trade those. I've done that. So as far as crypto goes, I treat crypto the same way that I treat Forex. In fact, my view on cryptocurrency is the same way that I look at foreign exchange or literal currency pairs. So I think that ultimately, when it comes to crypto, look, it doesn't matter. Let's say we bring up Bitcoin. Okay. And I don't care if it's Bitcoin or some other coin. It really doesn't matter to me. So I can bring up Bitcoin US dollar on, whatever. We'll go to Bitstamp here. I'll bring up the BTC USD. It's the same process. What's the structure? You can see it's been a short really clearly. Look, if you go grab those tools, everyone out there, do I use the same tools for foreign exchange, futures, crypto, stocks? options, ETFs, options, absolutely. Same, you will see the same layout on my screen, the same 4 primary indicators, the same foundational layout on my screen. And you can see here, crypto's been a short the rip easily since the end of November, right? This doesn't look like any other downtrend that we would talk about, right? So yes, if you have questions about it, yeah, I just don't trade it as actively as I once did. But yes, it's very tradable. It's an extremely liquid market, and I just view it because of its trading hours, which never close. I view it more like Forex. All right, next up, Shri asked, in my foundational layout, yep. What does a white candle signify? Oh, you're probably seeing okay, so it depends on the platform and I guess the color. It's actually a light blue. So when you look at grab candles, if you've already been over to countdowntrader.com and you scroll over to where you can download the free indicators, click on the Thinkorswim link for either one of these. It'll open up a a box folder, I believe. There you go. It opens up a box folder and you see you can download the propulsion, my Darvis 2.0, and the grab. Now the grab includes the wave. And so in that grab, there's actually 3 different colors, 2 different shades. Dark red is a down close. For example, with the NASDAQ we were talking about earlier, a lot of times what happens with color-coded candles, which I love, I love color-coded candles, is you lose an up close, down close because they don't use the shades. That's what we do with grab candles. We use a shade. So darker red for a down close, lighter red for an up close, but the red signifies a bearish momentum, bearish trend. The blue has the regular, I don't know what to call that, navy blue, royal blue. And then that lighter color, which, yeah, I would imagine looks a lot like white. That's actually a cyan or a lighter blue. That's a close. That's up. It's an up close. The dark blue is a down close, and blue signifies more of a neutral market sentiment. So that's what it says. Green, both shades are bullish, but the lighter green is an up close, the darker green is a down close. So the dark shade of all the grab candle colors are the down close, and the lighter shade is the up close. So you can keep the sentiment and trend reading, but not lose that more nuanced traditional Japanese candlestick understanding of where that candle closed. All right. So that's how we do the grab candles. All right. Peter asked, do I have HPMR for TradingView? Yes. It's easy to trade NQ during the Asian session when there's less volatility. Peter, yes, we do have it available for TradingView, right? So for those who don't know what HPMR is, it's called the hourly price movement range. They come in packs. So I make the pack for futures, ES, NQ, YM, RTY, CL, crude oil, GC gold, available in the futures, simpler futures trading room. And I make available the futures and the ETFs available in my Sector Secrets Mastery. And we're looking at expanding those packs in the future, but those are available for those of you that have the membership to those 2 rooms. And yes, TOS and TradingView. TOS and TradingView. All right, moving on. Good morning, Andrew. In regards to my charts, could I explain my Darvis 3.0, the Darvis signal? Sure. Do those show up that prices broke through a Darvis level, perhaps a Darvis level breakthrough? So if you have Darvis 2.0, and if you're a devotee of Darvis, as I am, you know that the original use of Darvis was to play breakouts. So our Darvis 2.0, the free one that you can get from countdowntrader.com, has an arrow that does show the breakout, but I don't use it that way. I don't trade breakouts unless there's a specific underlying market environment. And that's all part of, the way in which we choose which type of strategy that matches the market. Darvis signals basically acknowledges that there is a pattern that occurs before the box forms. And so I like that pattern. It's an important pattern. So Darvis signals find the pattern, whether or not there was a box, it doesn't matter. So it's actually 2 things happening at once on the 3.0 or the Darvis signals premium version. So no, it's not about breakthroughs. It's actually about exhaustion. It's a stall or reversal pattern that it is identifying. So thanks for the question, Andrew. Next up, Azendi asks, what are the criteria do I use to scan for stocks? How do I pick my T1? That's a huge question, clearly bigger than a 20-minute conversation. This is exactly what we do in some of the conversations in the countdowntrader.com site. And then, of course, what I do in the mastery and in the futures room. So the criteria, outperformers, always outperformers. And then after that, we always prioritize the outperformers, which means trends. And then after that, we might look at choppy market setups. For example, Ford was on an outperformer, but it had a really nice choppy market setup that I look for. And then as far as targets go, this is important. Never expect, this is a really, really important one. Never, and I don't say never and always very often, never expect the market to make a brand new, recent, or all-time high or low because now we're in the market. So what I do is I try to ask myself, where has the market been capable of reaching? And I use that well-worn path to say, hey, look, this is a prudent T1. This is where we've stopped before, or this is where there's a volume, a lot of volume, point of control. This is where there's a Darvis. We've been here before. We saw a certain reaction. I'm going to presume that happens again until it doesn't. So I think one of the biggest mistakes that a lot of traders make is they buy higher highs and then they need brand new highs, or at least brand new recent highs to see a profit. I don't believe in doing that. I think it puts us way out precariously on the ledge, on the edge of a limb. And I don't want to do that with my trading. So think about where the markets have stopped before, where there could be support or resistance within the range. For example, on Ford, there's a gap close up here. There's a point of control. I'm not looking for this to break 26. I'm not even looking for it to break, 2080. Think about on the way there, what are the obstacles? So that's how I do it. That's how I do it. Coke. So we had a trade in Coke, Battlehawk. You probably remember. We had a trade in Coke. Was a good trade, really good trade. And then what do? We wait for earnings to get by, and then we can, or at least hit the markets. We get that initial volatility. And yes, if we can get a shot at the wave, it's a buy, but not up here, not where it sits at the moment. But to your point, again, that re-entry in Coke, having already bought once, right? Do we want to do it again? Yeah, I wouldn't mind. But again, it's got to be in the zone. It's got to be that pitch that we know is the one that we want to swing at. I was bringing up that Ted Williams image of he knew what his batting average generally was, depending upon where the pitch was over the plate. We as traders, same thing. And that really is sort of Ted Williams and Warren Buffett 101. If you recall, if anyone's watched the documentary Becoming Warren Buffett, which actually I recommend for traders as well. I actually enjoy that. I enjoyed that documentary very, very much for a lot of reasons, but that little segment there about your circle of competence is amazing and applies to everybody, actually in every aspect of life. So that's the way that I look at it. It's outside of our circle, right? It's outside of that zone over the plate. All right, next up is, hey there, Christian. Is the S&P 500 doing a bearish daily 1, 2, 3? Too big, too long. I like that you're keeping an eye on it, Christian, but it's too large. It's taken too long. So I'd say no. I'm bearish, but I'm bearish structure-wise. I'm bearish because we have so many red grab candles. I'm bearish in many ways because I think the stock market might get a little heavy due to the macroeconomic trends that we're dealing with and this hawkish monetary policy that could see, although it's backed way off it, a half point hike in March over a quarter point. But it's kind of back to, let's take a look here. It's back to, wow, getting very volatile. You see this? Yesterday, this is so interesting. Here you go. That was the read before CPI. That was the read before CPI. And then we had a higher expectation after CPI for a potential 50 basis point hike or half point hike, right? And then when Bullard hit the airwaves, frankly, I didn't know what he was saying. I didn't pay any attention because I could see the way the market was responding. That we went right back to, oh no, we're only going to get a 25 basis point hike. And then here we are this morning. When we cross that 80 threshold, it's pretty much quote unquote fully discounted. We are getting very close. It is very likely, based on the target rate probabilities of the Fed Fund futures, that we're going to see a half point hike in March. So, does that weigh heavily on the equity markets? Does that send bond yields higher? Does that send the dollar higher and the euro lower? Euro short was a trade that we had. These are all the dominoes that fall once you understand how to measure, right? Not speculate, measure the rate of change of these macroeconomic factors. So I don't see the 1, 2, 3, but I am bearish, Christian. I am bearish. All right, next up, let's see here. Julian, good morning. I just want to say that I'm very happy. Oh, awesome. You're part of the Sector Secrets think tank. I love it. I love it. I'm going to see you all in the Sector Secrets room for our AMA session, or Ask Me Anything session, tech questions, settings, general questions. And we'd like to wrap up the week, making sure that whatever you've been working on, we can address at the end of the week and sort of close that loop and keep the education and keep the trade ideas going. So yeah, I'll see you at 3:00. Awesome. Awesome, Julian. Fantastic. The group keeps growing. And by the way, if you're curious, Rag, what is this Sector Secrets thing you're talking about? It's the way that I trade, period. We do a little intraday trading in there when the market environment says we need to, not expect longer term follow through. We do, of course, the swing trading in there. We're even going to start including portfolio type analysis every quarter in there as well. So it's my trading life encapsulated in that service. And if you're kind of curious, okay, Rag, that sounds intriguing, but how and what have you been doing? Go grab those indicators from Countdown Trader, marinate with them, have some time with them on your charts until March 9. And then on March 9, we're going to have a webinar where I'm going to show you what we've been doing in the mastery. So it's really going to be, hey, this is what we're doing in the mastery. And, we have actually a pretty darn good offer. It's a mastery promotion that we have on March 9. So if you've been curious, if you've been sort of putting that off saying, yeah, Rog, I'm not really sure, get the tools. You'll get a good feel for the kind of tools that we use. And then on March 9, I'll explain what we've been doing. So hopefully that'll give you all a much better idea of what we seek to find opportunistically in that room. Double JT Multi. Can I explain? Jim, Lorna cooked this up for me a long time ago. And based on the fact that we have relative outperforming stocks and then sectors, the double HPMR is just right now, it's two JT multis. In other words, I can look at the JT multi of the say QQQ while I'm looking at the JT multi of the XLK, and I can just compare them both. That's all. We'll probably, I think we have in the past, but I can throw that into the mastery room. That's not a problem. And it just makes it easier in this environment when I'm trying to compare, say, an index to a stock or an index. So for example, QQQs are double red. Is Microsoft. See, I can get a quick comparison of the Q's structure, momentum and trend structure while I'm looking at Microsoft. What if I want to look at, Apple and the Q's, or what do I want to compare the S&P and the Q's so I can see the structural differences? And oftentimes there are. And if we're seeking outperformers, that's a key part of what I want to do. So it's just two of them. It's just a neat way to view it. Commodity names like AA and FCX. Hey there, Rick. Sure. So AA, Alcoa. There we go. Beautiful. Heading higher. This is gonna benefit from the inflation narrative. I believe Freeport-McMoRan will as well. But hey, Alcoa has to pull back. Freeport-McMoRan is very volatile. But one of the things that we did talk about and set up in the futures room, and then talked about it in the mastery, because we don't have an ETF for copper. The last few times that we have tested the 200 propulsion, those white set of dots, You can put this on your chart. Last couple of times we've tested it, look what's happened. It's not a pretty test, right? It does tend to be a little volatile. But if you're going to be bullish, if you're looking at Freeport McMoran, this syncs up with the same 200 test that I've been playing for months on copper. See that? Every time that copper gets that 200, look at that. It doesn't stop on a dime, but look how quickly it is the catalyst for a move higher. 1, 2, 3, 4, 5, 6 times. So when the dots are there, it's more powerful support. When it's just a line, not necessarily as sure-footed. So when I've got an copper, because copper and Freeport tend to track together, which Rick, I'm sure you know since you're looking at it. Do you see how it's synced up pretty darn well? That's the trade. That's the trade. So we just got to wait for it to reset. Where it is right now, that's follow through from that 200. So I hope that makes sense. Hope that helps. All right, next up. Do we have JT Multi on TradingView? Yes, I do. It either comes with classes or it's in the Sector Secrets Mastery. There are a number of tools that I make available in the Mastery because one of the things that Trish and I were very conscious of when we were developing what the Mastery would ultimately be is that we wanted everyone to have access to my foundational layup, my primary tools. And we didn't want people to feel as if they needed to get a bunch of premium tools. They join the Mastery, oh, but they need this indicator, oh, but they need this and that. The Learning Center and the tools that we share in the Room Drive and the tools that I share with you all, that's all you need. And that was a very, that was a very important thing for us because we just wanted everything available for you all to start understanding what I've been doing. And these are tools that I've been using in many cases for decades. So yes, and more, Julian, and more, because I wanted you all to have that, those tools, right? I wanted you to have everything you needed. Michael, oh, I appreciate that. Yeah, Raghee does mean queen. Raghee means bad-tempered. Raghee, which is supposedly my given name, means queen of queens. No, I appreciate that. Smash the like button, but y'all are great to spend your time with me. I do appreciate that. Leave any comments or question that you have in the comment section here at the Simpler Trading YouTube channel. And yes, do smash that like button. I do appreciate it. That's awesome. Queen of queens. Raghee, queen of queens. Raghee, bad-tempered. If you ask my husband, he'll tell you I am very much both. All right. So Tracy said, I like my style, but your style, but I don't do futures. I have a small account. Do you have anything for my type? Tracy, we think scalable, right? This is something Trish coined for my trading years ago. Scalable, small, large. We're just going to say scalable because it may be a smaller account now. So what that means is you want to focus on less expensive, less risky trades, right? You don't have as much margin for error, and that's okay. I was once there too. I had a relatively small 4-figure account when I started. And ultimately, what it's going to do, small account trading, is it finding expensive stocks poised to make a big move? No, because if that trade goes wrong, I will say that you're likely to lose too much of your account to the point that you may not be able to come back up to the plate for another pitch, right? I also don't recommend mini futures for a small account. Micros are great, or even options on the futures, especially options on the ETF alternatives of the futures. It's got to be low cost. Cost is a cousin to risk. So that's what I teach you all in the Mastery, how to position size and how to keep risk at these paper cuts. So I do not recommend minis. I was talking to the group yesterday. I'll wrap it up on this note. I was talking to the group yesterday. We had 2 great trades. We were short the Dow, short the NASDAQ, and short the S&P. And we had our first target hit. We did our typical protective break-even stop after that target was hit. And the markets kind of went sideways. We were in an unrealized profit, when we were still up on the trade, even though we scaled out, just moving sideways. Gained a little unrealized profit, lost a little bit, gained a little, lost. But the trade was still valid and our break-even stop was still untouched. Then all of a sudden, the gift that kept on giving yesterday afternoon, Bullard, boom, hit the market. And the NASDAQ, for example, and I think I covered this in a free video here at the Simpler Trading YouTube channel, so you could see me walk you through the very trade that we did. And the NASDAQ went, what, 300 points? I was not expecting a $6,000 second leg of my NASDAQ day trade yesterday. Ballard, who knew, right? But I knew the trade in this environment was still valid to keep the short on. And so what I wanted to tell everybody, because everyone could do the math and go, oh, look what you made. But this is where it's really our job to talk about the transparency for the entire trade. Because the first leg of the trade, with the number of contracts that I had, and this is why I say minis are not necessarily small account friendly. I took an unrealized, now granted, I had multiple minis, but in the NASDAQ alone, I believe I took an unrealized heat of about, I think the S&P trade, I think I had a heat of about $6,000 or $9,000. I think it was 9 on the S&P and 6 on the NASDAQ. So yes, I was playing multiple minis, but I took quite a bit of heat before the trade went in my favor, right? And that's where we have to be. That's where I think we have to be really straight up about, hey, look, yeah, the trade worked out great and the initial margin was low. That's not the whole truth, right? The whole truth is, if you can't take the heat, if you can't hold on to the trade until we hit the target, or worse, if we're adding even more contracts, which may not be necessarily affordable or even risk intelligent, right? And then the market goes in our favor and then we celebrate the win. What if we got stopped out? We have to ask those what ifs. So I like to be transparent on both legs. How much heat do we take? And then, yes, then how much were we able to make? So with a small account, what I'll usually say is we need a fixed ratio approach and a fixed paper cut levels. So for the most part, what that worst situation is, and you can position size accordingly. I hope that makes sense, gang, because I know it's the most unsexy part of trading, but it's the most important part of trading. Position size and risk management, and then trade management, right? That NASDAQ trade was really not a risk management only situation, right? It was also a trade management situation, right? How do I manage a winner? Never let a winner turn into a loser. How the heck do we do that? And so that was really a big part of what I walked you through in yesterday's free video, which you can check out right here. I know I've run over. I tend to do that on a Friday. But anyways, thanks to everybody for sticking around. As always, great to caffeinate and dominate with you all. Make sure you pencil in March 9. We're going to put a lot of these tools together, talk about how I've been trading the last few months, which have not been easy, no doubt about that. And ultimately, all of this stuff I'm going to be able to cover for you when we see you. So pencil that in, smash that like button. As always, thank you for your time. And I will see you all on Monday. Enjoy your weekend. Enjoy your weekend. I guess a lot of folks have been watching the Super Bowl. So enjoy your weekend. And I'll see you then. 9 a.m. Be good to each other.